Hey everybody, it is Friday the 20th of September 2019. This is Brian Shannon speaking. The markets did sell off here for the most part a little bit. We see the biotechs did bounce a little bit, as did, of course, oil with that strike on Saudi's fields. But let's take a look at the market. And first of all, I wanted to point out the S&P 500. It says it's down 278. The SPY was, but it did pay a dividend of $1.38. So be aware of that. It's not as bad as it might look at first blush. But we did lose a little bit of ground here this week, and still healthy overall with a rising 20 and 50-day moving average. Looking to a 30-minute time frame, we're right at that volume-weighted average price year to date. We did find buyers there earlier in the week, and then a nice bounce. So, you know, what it's looking like in the near term is a little bit of caution warranted. We kind of have this little level up here, and then this level that we've been looking at as support. So we've been in this range, and now if we get stuck below 298, then it's likely that we will continue lower. I would say that you would want to keep an eye on the volume weighted average price from the August low, which would bring it down to about 296. And then the daily time frame, that's approximately where we see the 20-day moving average as well. So just a little bit of caution going into next week. And the NASDAQ didn't quite make it up to a new all-time high, but still holding above this prior band of resistance, as well as what's now the location of the 20 and the 50-day moving average. So the key level in here that we want to see this market hold above is really 189 to 189 and a half. If it stays above there, then we continue to be intermediate term bullish. But you know, we're seeing a little bit of profit taking. We've had a good run, and you know, we've seen broken trend lines, which slowed down the rate of ascent. And now, you know, if we break back below 190 and stay stuck below that, then you know, then we could see a little bit further decline, like I said, down to that 20 and 50-day moving average. So a little bit of defensiveness going into next week, I think, is prudent. The Russell 2000, as we know, came up to this trend line and fell short of the prior band of resistance, but it's undergoing what looks to be some normal profit taking after a nice rally off that 144 level. Looking at over a 15-minute time frame, you can see this is the level that I have, you know, was talking about for subscribers to Alpha Trends, that we're stuck below the 5-day moving average, but really more neutral. We do, you know, I don't want to throw in the towel on the Russell 2000 just because we're seeing a little bit of consolidation. We have 154.50 is where the volume weighted average price is for the month, and then you know, the levels below that would be at 153 and 152. So with all these markets below a declining 5-day moving average, it tells us that next week we want to, you know, be protective of the stocks that we do have, and we want to be a little bit cautious about initiating new positions in this area until we see some further profit taking. Semiconductors did break below some support in here, and we could really just kind of extend that off over to this area and see that, you know, this is the key level in the intermediate term. We're below a declining 5-day moving average. So as far as the semiconductor index goes, you know, the levels below that are the 20-day moving average and the 50-day moving average. If you saw on Yahoo Finance, I had talked about NVIDIA and that it's starting to look like it has the potential to move higher again. A couple of things I'd mentioned there is the volume weighted average price off the all-time high, and you can see that we're still holding above that. Let me make that a little bit thicker so we can see it better there. And you know, I consider that to be kind of an important level. That's also where we have that 50-day moving average. So as I'd mentioned on Yahoo, I think that if you were to buy this stock yesterday, that is around the 177 level, it would have been just a small piece to start out, because we are undergoing a little bit of profit taking. The key is to buy on strength. There is a declining 5-day moving average here, so I think that, you know, if you're not long it, you can, you know, keep an eye on it, and especially how it behaves down near this 169, 170 level. Let's go back to the biotechs now. As we noted, you know, this had been a weaker group earlier, you know, for much of the year, and now we're getting that rally up to the volume weighted average price from the beginning of the year, as well as that 200-day moving average. So this is I don't know why it wasn't showing, but there's that volume weighted average price from the December's lows, and now we're closing in on that level with the 200-day moving average. I'm not bullish this group, but I certainly don't want to be bearish with a rising 5-day moving average. So I continue to think they're just in a void. One of the stronger names in that group, though, is Amgen. Amgen has, had a stronger move, but it's a pretty volatile stock. You can see all this choppiness in here. To make sense of it, let's just go back to, there's the month-to-date volume-weighted average price. But let's look at a 65-minute time frame, and you see that this big event right here is worth drawing a volume-weighted average price on, and it tells me that really, even in this stock, there's not much point in owning it. So you might look at it and say, well, it's in an overall uptrend, but it just doesn't look that great. So I think you've got to be pretty choosy next week as far as what stocks are to buy. There's, obviously a lot of damage done to a name like Roku. I had pointed out in there that on Twitter, that is, that the measured move would have indicated, so, if we call this point A and this point B, we take the height of that and subtract it from point C, that gave us a price objective down near 115, and that 115 level was also the volume weighted average price from this low. So as I'd stated on Twitter, what we want to do with that information is not to say, hey, that's a level to buy the stock. That's a level of interest. Support and resistance are only known after the fact. What we do is we say, let's take a look at that 115 level on a shorter time frame. Let's go to a 15-minute time frame and see, is there any evidence that the buyers are actually trying to gain control in that area? None whatsoever. We could go down to a 1 minute, well, let's go to a 2-minute time frame and take a look at that 115 level again. Zero evidence that the buyers were trying to gain control. The stock stayed stuck below its declining volume weighted average price all session, and clearly there's something, a big unwind going on in this stock. Maybe it bounces soon, who knows? I'm not here to play guessing games. The point is, when they're in a downtrend, you can look for levels of potential support. People will say, hey, support's at this, support's at that. They're full of shit. We only know what support is after the fact. So anyway, that's going to do it for now. I hope you have a good weekend. Thanks for tuning in.